What is up, guys? It's your boy GRC. We're coming at you live every single day at 11 a.m. Eastern. Let me know how the audio is. Let me know how you're doing in the chat. How's everyone doing? Come on, guys. There's a lot going on, and guess what? Me and Sam don't have a crypto project, so we just get to sit here and talk about them, and that is real freedom. No, seriously though, there's a lot going on in crypto. There's a lot coming out. There's a lot of people upset about all the centralized exchanges that are going down. There's a lot of people upset about Sam Bankman-Fried and what he's doing over there in the Bahamas or whatever. And there's a lot of people that are upset about their bags right now. And that is bullish indicator one for trend reversal, is that everyone is scared to death. Sam, trend reversal, I'm sorry, I have to mention. Come on, somebody tweeted, they said, today, Jim Cramer, I don't really know who he is, but he had a lot of followers. He said, if you have any money left in crypto, get it out. And I was like, ooh, bullish indicator. Wow, big guys really telling all their buddies to get out of crypto when just 3 months ago, they were telling all their boys about that FTX yield and all of those wonderful benefits of being part of the FTX system. And now we're seeing crypto.com. We've seen it all, guys. Skin tag tokens all over the place. And I'm going to be a little bit harsh today, not on anyone in particular, but about like a general thing. And Richard's really right about this a lot. So, you got to give it props to the boy. These derivative products, Sam, how many can there be? There's only so much liquidity. How many new eyeballs are new, Sam, like brand new are seeing this? Yeah, we see the transaction numbers from a bunch of traders that love Hex and love everything, all that stuff. Maybe they're moving over, which is bullish. But we all know Metcalfe's law. I mean, come on, we all know that. That's 101 in crypto. You have to get more users. And frankly, Richard's probably pretty good at doing these, like from his stuff today, like people are really pumped on RH right now because one thing RH did tell everyone was not your keys, not your crypto. And that's just really the truth. So guys, and we're going to be talking about Icosa, Hedron, Poly. There's been problems. Me and Sam are going to open them up. Sam's going to give his raw, unbiased take, which frankly scares me a little bit. But that is okay because I kind of want to know the truth. I'm a little under the weather, guys, so please just bear with me if I'm thinking a little slow. But I am super excited about crypto. Never been more excited about crypto. I say it every day, guys. DeFi proof. Smash the like. Biceps in the chat. Let's go.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some Hex and I'm making a stake. Got me some Hedron, I'm making it rain. Pay me some Maxi and that's just in case. GymRatCrypto sent me to show you the way. DeFi proof, yeah. Crypto in the morning. 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 Crypto in the morning.
Oh man, this is hilarious. The crypto.com CEO, Chris, whatever his face is, says withdrawals, this is from 3 hours ago, withdrawals from the platform are working and will continue to work, moving to reassure markets unnerved by the sudden collapse of rival FTX. How much money do you think is being pulled out of crypto.com per hour?
I had to guess. When?
It's currently happening. Here's another chart here, which you won't be able to see, but That is the withdrawals from crypto.com. It is down and to the right. They potentially could be in a liquidity crisis soon. If
Potentially, Sam, there's no liquidity left in crypto. It's all sucked out. Like it's just basically all that's left is guys with some money propping up their careers and their entire image, because that's all it's down to. Like a lot of no one's going to freely provide liquidity with a lot of these things like that. It's just, we're just not there yet, but some systems are better than others. Like, there's sometimes it's really hard to grasp how early we are. I say it all the time, and I know how early we are, but I don't even know how early we are sometimes, because it's like unquantifiable, like comparatively to what I've experienced in my life and other things. Like this is like infancy. Like we're seeing children on the internet running around stealing money, Bahamas, sexcapades, amphetamine. Well, I guess that's everything, but like, it's just, frankly, it doesn't work good. And I don't know, I hope it works good one day, but do you think there's an escape? Like, do you think there's freedom, like within some of these DeFi protocols or?
I think if you're actually in crypto, like you're good. If you are in crypto and you own your own tokens and they're not on a centralized exchange, I think you're good from the standpoint of the exchange not stealing your money. But then you also have to consider the risk of the actual protocol you're in. Right? Like what thing are you actually in? Is that decentralized?
It's all fake liquidity on some of those things too. So they could rug that stuff and it's all theirs.
How much does this sound like Celsius and FTX? This is from 3 hours ago. This is again from Chris, the CEO of crypto.com. Says withdrawals from the platform are working and continue to work, moving to reassure markets, right? FTX says the same thing. What was this scam guy from Celsius? What was his name? Mashiskowitz or something?
Alex Mashinkok.
Yeah, that dude. He was saying the same thing 24 hours before they were like, "Oh, sorry, we're fighting bankruptcy."
Well, Mashinsky was one of those, like, I can't say the stuff I say around here because some people from other places watch the show, and so I don't even know if these things are true. But like, Mashinsky looked like a snake, like the way that they would stereotypically make a snake look like in the States. Like Mashinsky, like looked like every bit of that to me. And then the way he talked was like so smooth, so cool, but like the world was always crashing around him. But he was always like in his bag, like cool, calm, and the conversation. I was like, this dude's fricked up in the head. If anything, that dude was pure scum. I hope these guys go to federal prison, and I hope they get to keep a cell phone in there, and I hope they get really good roommates in there. And they beat them up.
So
I don't think they're going to get arrested. Richard said that. I don't really even think he did anything illegal.
So I'm distracted by this from Chris, right, the CEO of crypto.com. So if you look at the comments on this, there's like one person that says confirmed, and then they're like that they are working, and then right after that it says nope, I've been waiting over an hour. Then there's other people in the comments also saying I have pending withdrawals for a couple hours now through Polygon Network that's up. Then there's other people posting screenshots that says error, like trying to withdraw. If you guys have money in crypto.com,
yeah, explain it. Just don't read the screen, but explain what's going on for the people that are kind of like just paying attention, so that we can have like a fair warning for what's going on.
So if you run an exchange,
not financial advice either.
Yes, you have a pool of capital that is other people's money that you're earning a vig on, and one way to earn more money on the pool of money is to borrow. Right. So they're taking other people's money that as people do things, they earn a fee on. And then they're like, hey, bank, or they do it in crypto potentially so they can obfuscate like the loan. They're like, hey, we have $6 billion of people's money. We would like to borrow $1 billion. Right. It's just nothing. Right. It's 18% of the total amount. It's not a lot of leverage. So they'll borrow $1 billion of that. Right. But now they'll do that again over here with a different player, so they don't know about this. Now it looks like instead of $6 billion, now they have $7 billion because they borrowed more, and
they don't understand the liquidity in crypto, and that's
especially when everybody runs for the door.
It's fake. Like sometimes it's fake. Like most, it's like if you're investing in something on ETH and you have no idea what it is, like, and there's a lot of liquidity, like guarantee it's like 3 dudes. because it's just too new. It's not natural. If you watch a natural flowing thing that has product market fit in users rather than propped up, you'll see it takes quite a bit of time, at least a year, maybe 3 months, 6 months, something. Like even the best, like Zen, for example, was pretty viral right off the gate, 200,000 in liquidity. What's it been, 40 days? I think these numbers are fair, Sam. And that's what I'm saying. Hedron numbers were fair the whole time I looked, like I watched, and it got dangerously low. But the whole point is like people need to, that's why I harp this shit so much. Like that's why everyone effing makes fun of me and all that crap. All I do is talk about liquidity, but I don't talk about providing liquidity as much as Sam. That's going to be more Sam's specialty for real. Like that's what he's good at. Stuff like that, at least like that kind of nature where you have to pay attention. You got to be really detailed. It's 100% specific. But the important thing is that you understand liquidity. That didn't take Sam long because he had experience, so it was not confusing. He had to understand the DeFi like flow of money, but that's it. But nobody understands liquidity. Nobody understands these pools. I even mentioned it to Richard on the stuff like that. He defers it because he knows everyone in the room has no idea what we're talking about, except like a few. Of course, there's a few. Like I'm not going to be stupid and say that no one understands that, but it's true. It's like it's the best kept secret in crypto. It's like liquidity pools. How to adjust them, how to move them, how to understand them. Because I see people providing V3 liquidity on a stupid asset, pops one-sided in 1 second, which we both know would happen on any stupid asset. And I understand it, but other people don't. And then they do a big like Pulse Doge and ETH position, and it just swaps at 1 second, and they're like, holy smokes.
With the crypto.com and FTX and Celsius and all these other places it's like having a stadium with 1 million people, or say 80,000 people in a stadium, right? And there's 6 doors to leave. So what do you think happens when everybody's like, somebody goes into the stadium, they're like, hey, I've got a bomb, right? Everybody tries to leave through the 6 doors. And when this happens, people get hurt, right? The stadium is going to get broken as people try to leave, because if there's not a door there, they will make a door to save themselves, right? And this goes for the stadium, right? So the stadium is like, oh shit, they're breaking the stadium. Well, let's just lock everybody inside and say this is over, right? And that's what happens, because those people are a representation of liquidity. So as those people are pulling out, the stadium still has bills to pay. The stadium still has debt payments to pay, and everybody's just taking their money back. So at some point, they're going to run out. They're not going to have enough money because they got $6 billion, but then now they have $10 billion of capital exposure, and it's in the form of debt. And it's a very scary thing to do this in crypto. Very scary thing. People over leverage in real estate sometimes.
Yeah, but it's so different. And like now that I understand it better, it's so different when you over leverage on something that's legit, and you can like just like be at least predictable within a 10% margin of like what's going to occur within a 10% margin. Like, dude, come on. You're not going to miss real estate by 10% unless you're a butthead.
Look at this guy. He's also a CFA. Ron from Twitter. Why would
go ahead and read this for me so I don't have to read it. I'm sorry.
Why would FTX acquire Voyager and BlockFi if they had no cash and were insolvent? So if you don't remember, a couple months ago, Sam Bankman was like, oh, we're going to acquire Voyager. We're going to acquire BlockFi, right? What we're thinking, it's truly Meshovian, whatever that word means. Here's a thread on my hypothesis. 2, FTX was acquiring their creditors to buy time and slow down a margin call, which we could talk about in a second. Recall, it was known that FTX had hundreds of millions in loans outstanding to Voyager. So that means that before we get into point 3, if I owe GRC's company $100 million and he is struggling, well then when you're struggling, you're going to be like, hey, Sam, you owe me money. You need to pay me now, right? You're going to come up with any little TOS, so terms of service, a violation that you could possibly think of, so that you can call on the loan you have to meet, meaning I got to put the money, I have to pay you back, right? Because then if you have your $100 million, maybe that saves your company. So in order to avoid that, FTX says, because then they would be at risk, and they're like, oh shit, we don't want them. I don't want GRC to tell me I have to pay him back. Well, let's just buy his company, right? Because then it avoids that.
The books. It avoids the books. You swallow the books. You swallow the books. Yeah.
When you can't pay off your debt, the debtors wipe out your equity in your own company. Number 3, FTX, in a truly Lex Luthor way, sought to buy Voyager to prevent this. The new parent assumes a subsidiary liability. So if I owe you $100 million and I buy you, then I can wipe out my own debt to you. So that effectively, yes, there's semantics. You can do things, but we already know they're fraudulent as fuck. Like,
it's really bad. It is bad to the point where it makes me feel bad for random people using Crow. It's like, it's got to be pretty bad. It's like, I feel bad for like random Joes that like, because it seems so legit. And I didn't mean Crow, by the way. Like, I meant any of them that like went under. I just said that one because that was the news yesterday. But like, it hurts, man. I know people with like $50,000 Crow dude, the amount of credit cards that I don't know if this is like 100% the same thing that matters, but I mean, if it goes under into bankruptcy, I'm sure it matters. But Crow credit cards are probably the most popular credit cards on cryptocurrency that I've seen. And you don't see too much of it, but when you see those guys with those black diamond cards, sometimes pretty sure that means you have like 40. It's either 40 or like 400 grand within that ecosystem just to be eligible for such a credit card. So those incentives can be pretty harsh when they're really pushing people to do something, but in reality, they can't stand. There's no foundation.
I wouldn't be surprised if things get uglier. I wouldn't be surprised if things get even uglier as we understand. Like, think about what just was able to be covered up by the purchase of Voyager and BlockFi. BlockFi and Voyager were both going to go bankrupt, and they both had loans to probably Alameda and FTX. So by buying them, they can forestall or wipe their own debt away, kind of thing. But then you have like all the other issues and bad loans that are coming due, right? This is going to be a monopoly, like House of Cards. It is going to be hilarious to watch play out because I don't have my money involved.
Go ahead and this is bullish for the bottom, guys. You want the bottom, so make the bottom happen. Get these guys public. Show everyone all the stuff. But Sam, let's continue reading this for the sake of time because we do have to talk about some specifics within the Hedron Icosa Polywada.
Okay. So also, this is point number B in point 3. Also, FTX could acquire their inflated but actually worthless 32 billion equity. They positioned as a white knight when in fact they were the delinquents. Number 4, FTX would also prevent the forced selling of tokens in a bankruptcy process, SOL and FTT, which would help them from a debt because then they will get margin called in a world where the two targets go through bankruptcy. The forced selling would have imploded the Alameda balance sheet sooner. Number 5B, FTX was expanding the asset side of the balance sheet. No, FTX was coercing their porticos to whatever, I'm not sure what that means, to custody their clients'
That's
funds.
a good word, porticos.
Yeah, what does that mean, bullshit? Funds at FTX. This would enable FTX to violate the segregation of customer funds and use client assets as a source of funding. This is not good. Not good at all. It's not good.
It's abbreviation for portfolio companies.
Thank you. Appreciate it. So FTX was coercing their portfolio companies to custody their clients' funds. So basically, you know the saying, not your keys, not your crypto? What they were encouraging was the exact opposite. Hey, why don't you actually, guys, I'm going to set up an LP fund. You guys can invest in the fund, right? And I'll take control of your keys. Don't do that. That's what they were encouraging.
Mashinsky was the worst with that. He always said his little slogan was it was like be your own bank, but like it was like Celsius was the bank that they were talking about. So like it was like be your own bank, blah blah blah. the things that Alex Mashinsky said live on stream were so rough and tough and bad, and that this is all normal to me. Like he really, Do Kwon was a little bit more like, I don't understand that guy too much, but Mashinsky, like he was public. Commercials. He was dude. I remember everyone. Richard today when he was streaming was like, I'll go to every interview and say, did you shill Celsius? And they'll all say yes. And we didn't do that actually. I don't even think we could have. It was barely like shillable show, and that thing went to zero. But the paid groups that I was in that were really expensive and good, they all shilled Celsius.
The number 6 here is hilarious. Ordinarily, a business funds via, that means they grow their business via cash from operations, right? Like I sell these pens and they cost me 10 cents to make, and I sell them for 37 cents or 63 cents each. That delta on there I use to invest back into the business. They also fund from cash from investment. So if I hold a investment as say if I have a warehouse and I rent out part of the warehouse to somebody else and I have financing activity, those are the other two ways, from your investments and from your financing activities. Now, this is funny. This is a new type of creative financing. It's called CFFF, cash from fraud and fleecing. This guy's funny. FTX and Alameda had a problem on both sides of its balance sheet. On the liability side, they had loans they needed to pay back. On the asset side, their retained earnings were wiped out from losses on running a negative NPV business. So what he means right there, NPV is a net present value. So when you talk like financial modeling and stuff, you take all the future cash flows and you discount them back to the present, right? So if I was like, hey, can I have $1,000 today or $1,000 in a year from today, right? You'd be much more likely to value the $1,000 today at 1,000 than if it's 1,000 a year from today. You're going to be like, well, I need interest on that, right? Like it's not worth $1,000 because it's a year away. That's what NPV effectively is. It's called the time value of money. Number 7, acquiring Voyager and BlockFi temporarily fixes both problems. It requires the target to have credibility in the acquirer and also acquires reverse due diligence since the form of payment is FTX equity. Oh man, so their scam token they were paying with. That'd be wow. If this hypothesis is true, this would mean the fraud perpetuated by FTX is truly epic. I agree. If they're also using their FTT token to pay, so if you don't know about like how mergers and acquisitions work, you can generally pay in like one of two ways. You can pay with cash or you can pay with equity, right? So, or some combination of the two. So in a cash deal, I'm buying GRC's business and I get here's 60 grand, right? And we're donezo, right? Where you can also do like, here's 30 grand and I'm going to give you $60,000 of equity of Sam's token, right? Cash, like Apple does this, Facebook does this, Google does this, every single large company does this. They either pay in cash or they pay in equity. So it looks like they potentially structured the deal so that they were paying with equity. So they know that they have like a scam token that's just garbage. And then they're using that scam garbage to buy another company.
$19 million, just a little breaking news, $19 million of Paxos was frozen on FTX and removed from FTX from Paxos. That's another 19 million off their spreadsheet. But anyway, Sam, continue with this so we can get through all this.
Yeah, this is kind of actually hilarious. Okay. If the hypothesis is true, this would be great. This is not merely a lie or lack of disclosure of conflicts, gross negligence, or a breach of client duty or self-dealing, any of which are damning in their own right. Number 9, Enron CEO went to jail for lesser infractions than this. Theranos was a fraud from misrepresentation. SBF was at the level of Bernie Madoff. I agree with this. Trying to keep the shell game going before creditors call their loans. Number 10, should get an investigative journalist on this, how to test. post the term sheet for BlockFi and Voyager acquisition. Also, how much was Alameda borrowing from BlockFi? Number 11. So, oh man, this
and then after this, after you're done reading this, I'm gonna pull up the image I showed you before, because that basically ties all this stuff together.
Yes. So this is a great image. So this is very bad. Very bad.
And Bullish, that message in the private is from Dipcatcher. He sent me that message this morning. I just wanted to drop it in there so you could see it.
They're number 11. And we're going to be getting to the Dipcatcher stuff shortly, guys.
Yeah, for sure. But continue. This is good. It's all relevant. And I think we have like 30, 40 minutes left anyway, if Sam's good. So,
yeah. There is still another big question that is open. Exactly what happened to the $2 billion in equity raised? Super Bowl ads and penthouse parties aren't that expensive. I will post this thread on this in the coming days. Thank you for the likes and retweets. Much love and many. Update. Info is coming to light. Oops. I just want to read that last little bit there, number 12 here. Info is coming to light that FTX in the acquisition and bankruptcy process sought to nullify the creditor claim Voyager had over FTX. Literally what I just said. Literally just what I said. If I buy GRC company and I owe GRC $1 million, when I buy him, as part of the process of buying him, I want to try to wipe out my own debt. Like, what a scam. Now, this is from Mario Nafal. A trace done using TRM, I'm not sure what that is, but TRM Labs attributions shows just how much of a circle jerk happened to take down Luna. Voyager, Three Arrows Capital, FTX, Alameda, others to be determined. And then the source is the analyst and verified source, similar to Mano. Check this out. FTX, they're all working together to push regulation while robbing everyone. Great, very
robbing everyone except those sneaky little DeFi projects with product market fit and good communities.
So if you check, FTX is in the bottom corner there. FTX is giving Voyager a loan of $625 million, and they're getting back $209. And then Voyager is also sending money to Three Arrows Capital, which is Three Arrows Capital looks like it's on here twice, I think. The red thing, I don't even know how to interpret all of this, right? But you have money flowing from FTX Global to FTX US to Alameda, and then they are also interconnected with FTX AR and Voyager, as well as Three Arrows Capital. Bullish, you have something on this?
Yeah, so just to give a bit of context, because I was sitting in the space as all this was going down and the insider was breaking all this down. So all this movement of funds you're seeing are essentially collateralized loans based on crypto and essentially reusing the same ETH and just passing it around.
Oh, perfect. Thank you. Okay. So one of the things that you can do in crypto that you can't really do in the physical world, if I, Sam Stolt, have a loan for $100,000, then it's going to show up on my credit. Now, if I, in crypto, borrow $100,000, and then I'm like, hey guys, I have $100,000, and then I just go to you and it looks like I have $100,000, you might give me a loan for $50,000. Now I actually have $150,000 worth of debt. Now I can take that plus my original capital and go to a third party and be like, hey, I have this, my assets, plus this other loan, plus this other loan. Can you give me some more money on top of this? If you, like, this happens in the physical world. If you understand real estate, your bank, when you're buying a property, will ask for 2 bank statements. So to get around whatever, to make it look like you don't have any debt, and I'm not saying you should.
It's the worst.
But it does happen. If I want to,
they do that shit to me too. So, I mean, remember when I was getting my house and I don't remember what was going on at that time, but they were asking for bank stubs and pay stubs for everything. I was like, bro, like, not everyone makes their money in one damn paycheck. Like, you know what I mean? Like, my paychecks were weird, like, you know, at the time. And
they want to create a paper trail to try to mitigate risk. So
I know they mitigate risk, but it's the stupidest way to mitigate risk. I feel like there's 100 different factors they could like quickly go off of. I don't know if it's the rule book.
So anybody like myself or Bullish who understands how they work, we just put money into the account prior to the 2-month mark, so that when they ask for the 2-month bank statements, I'm just like, oh yeah, I've had this money.
You're
in here
just
for a while.
hoping you don't have that.
Right. I'll give you an example. This happens in something that I'm very familiar with from probably Sam. You've heard the term double closings when you're buying real estate. So like it's very difficult to like go to a bank and then get a loan on one property and then tell the same, like, yeah, I'm also buying this other property. So you just stay quiet. You deal with two separate banks and you close on the same day. So neither bank realizes you're also doing another real estate transaction.
So effectively what Bullish is saying is, so you have asset A, you have house A, you have house B. If you're buying house A and bank B knows about this, then they'll be like, okay, well, that's already too much debt. It fucks up your DTI, which is your debt to income. So you can do something where you close on the same exact day. So you have a $300,000 house here, you have a $300,000 house here. Both of those banks don't know what's going on. And it looks like you might just be shopping, right? Because you did another inquiry, a hard inquiry at this bank. But in reality, you can time those on the same exact day. So you're able to get $600,000 worth of debt when technically, like by their standards, you should only be able to get $300,000.
It's just another version of kimchi arbitrage, arbitraging a system that is stupid. Like it's just like, okay, there's a premium here. You have to put in a little elbow grease. Some people have an easy time doing that. Most people don't have any money nor investments anyway. So it kind of does pinch off like between the people that, like Sam said, like, of course I would put money in my account if I was getting a loan. Yeah, I know you would. But how many people are in the position, one, where they're willing to learn all this stuff, and two, that they have money somewhere else, liquid in any way? I don't even know where people keep money. And that they can like dump into their bank account. People keep all their money in their bank account. Like most of it, other than their credit card, like that they pay for gas and like groceries and shit with. But anyway, let's not go down too far that rabbit hole. Sam pretty much just laid it all out for you guys. I mean, we could go down 150 different rabbit holes about how much horrible arbitrage and stealing and fake loans and fake fluffed up liquidity. And we could be really grateful that some of the products that we have at least have real user liquidity. I mean, it is nice.
Yeah, one thing I can say to before we move on to the next topic is that I've been listening to like all the stuff that's been going on in that massive Twitter space where Elon and Kim.com and CZ and people from Paxos, people from Crypto.com, MXC, they were all in there talking.
I'm not afraid to cover it. Was it recorded later?
Yeah, I'm sure it was recorded. And if you go to Mario's Twitter thread, he summarizes pretty much every breaking moment or breaking news. But essentially, it's not over. Like, it's not over. This is not over.
I agree 100% with that sentiment. It is definitely not over. USDD is still not back at peg yet. It's been there for a month below peg, right? Is this going to
they're probably just arbitraging it and then leveraging the money that they make on the premium within the company to give F something out. Literally, like I guarantee, like why would that be staying there? There's no reason for that to be staying there unless someone's waiting for people to buy and then milking that and just keeps liquidity trapping them because people don't understand it. It doesn't matter if it's a stable coin, just means it probably is around $1. That's what it's supposed to be. Like. That's all that means. It does not mean that you can't liquidity trap people under 3%. So, and people do it all the time. I'm not saying 3% would be a lot, like it's getting.
But if you use leverage, you can add 100 to the 3% and make 300%. Like that's how leverage works. Leverage is like bringing a gun to a knife fight, right? Like it's not even fair. Like using leverage like why do you think I'm a fan of fiat leverage? Because the parameters are already known. The parameters are all set out. There's a long history of fiat debt and how it works, depending on what type of structure you do it in. Like, I'm a fan of that. Crypto debt, not a fan of at all whatsoever. We are going to actually get into a clip here and transition to some stuff that's going on.
Just to cover a few comments before I get into this and talk about this. Guys, there was a big update on ICOSA yield last night. I checked my ICOSA.pro app. Yields were ridiculous. I said, okay, my bag just doubled in there or like did something crazy in there. I don't check it all the time, so I don't really know what it did. But it was a lot more than it was before. So I was like, okay, hold up. And then this whole thing opened up and I was like, okay, what's going on here? But first, Sam, let me tell you this and the viewers this. This is how I saw it as just a user and a person. I saw early on there was a mistake And then I saw Gold Key get so crazy pissed about something, and I was like, oh shit, something's going on, blah, 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 blah. And then it ended up just kind of like, not being the end of the world. But then the next day, something comes out about Dipcatcher, his partner, making a mistake. I know they weren't the same mistake, but mistakes in software, I guess, would be the. So I want everyone to say, like, guys, we got to talk about this stuff. We got to open it up. We're not going to point fingers. Sam's not going to care about anyone's feelings. I would probably care about the feelings a little more just because, I'm feeling a little shitty right now. But Sam, I need you to open this up for me and everyone. Hey, we're all investors, Sam. I am not necessarily. I didn't do it after Hedron and Maxi. I'm not going to lie. Like the derivative products were losing steam as far as potential upside because of just some liquidity stuff for me. But in the bear market, sentiment. But Sam, I'm going to watch this. It's a nice little explainer. Sloth was nice enough last night to go on live late night, show people what's going on in a calm, cool, collected manner. So biceps in the chat for Sloth. And if you don't know who Sloth is, we'll drop his YouTube below. Actually, I'll just drop it right now. Let's go.
Trickling in. 33. What's up, buddy? I hope you're doing well. All right. So, yeah, that's the chat. For everybody else who is trickling in, enjoy the show. So, important update on ICOSA. A bug was found in the contract that has to do with how the volume bonuses that were doled out to stakers at the end of their stakes for the ICOSA and Hedron pools. Basically, the way the math works out, I don't know the extra specifics, but basically when that bonus is calculated out, it's rounded down to 1, which essentially means there is no bonus. Nobody gets a bonus when you end your Hedron or ICOSA stakes even if the principal of your stake was a whale, dolphin, shark position. So this is a change. There was a math error that was in the contract, and now a incentive within the system no longer exists. So what does that mean? Well, first and foremost, I don't think it's breaking. It doesn't break the system at all. This was an extra incentive to get people to stake longer, or at least reward people for staking a large amount because they were incurring such a long minimum stake length. It was kind of like you stake a lot, you have to wait a long time to get your yield, but hey, at the very least, you have this 20%, 20, 15, 10% at the end of it that would incentivize you to do that. That incentive is gone. So people with large amounts of ICOSA or Hedron may be less inclined to stake it for a long period of time now, or may be less inclined to incur that long minimum stake length because they're not getting a bonus at the end of it. So that's definitely one drawback of the bug that was found. Now, the flip side to that is that larger wallets are no longer getting a large bonus of inflation at the end of the stakes. So like whales in the ICOSA pool or the Hedron pool would be accumulating yield for an entire year, and then on top of that would be getting 20% off an entire year's worth of accumulation. And that's a lot. That's a decent amount. A 20% bump in yield at the end, even 15 and 10% and 5 is a decent amount. And so that's inflation that no longer will exist. So, that could be spun as a positive. Long-term inflation is decreased. It looks like the SA burned a decent amount of Hedron so that the payout for yesterday was highly inflated. I believe it's like 5% of your principal, something along those lines, was paid out to like ICOSA stakers. And
5% of the principal.
By bumping it up, I believe an extra like 30%, 25 to 30% yield over the next year. So instead of like 40,000 every day, I think it's like 50,000 every day, something along those lines. So we got one big payday for everybody who was staked previously, as well as an increased base rate of payout for a whole nother year. So that could be seen as a way to mitigate the losses that people incurred, because I think one group of people this really affects are those who staked a decent amount of Hedron or Icosa before this bug was disclosed, with the expectation that they would be getting a payout at the end. And so kind of to make these people whole, because nobody going forward from now on will be staking or adding to their stake with the expectation of a volume bonus at the end of it, to at least make those people who were operating under the advertised rule set, even though technically it wasn't the actual rule set, for those people, they were made more whole by the extra yield that was given out by the SA. So that's a little bit of a mitigation as well. What else?
Can you pause that for a second?
All
right, I'm going to say one thing controversial, and then I'm done. I couldn't help. John kind of said it while I was thinking it. And again, I want to tell everyone that I respect Alex very much. And I really do like him. And he ignores everything I said to him. And I still really like him a lot. So that's just the way that is. But sometimes you can't see things when you initially put them down. I'm not saying I understand the code enough to blah, blah, any of that stuff. I could be 100% wrong about all this stuff, guys. Understand that I don't know enough about that. But are there, I don't even want to say it out loud. What's it called? Like when you built something in, built-in backdoors?
I get where you're getting at, but no.
Totally on that spectrum as far as like a devil's advocate.
Well, some context. This was audited by other humans, and they didn't pick it up either.
Oh, so basically, he laid out the framework, and they checked.
Remember, it's an immutable code. He submitted it for audit. We'll get into like who audited it because I think that's part of the story too. But other people didn't pick up the mistake either.
And where does that lead us? What is Sam? Can you round that statement out a little bit? And look where we got Slaw's face. Oh no! Keep it.
Well, people make mistakes. Like it's very common for people to make mistakes. That's one of the reasons people like crypto, in the sense that once it's done, and you can't go back and break your promise on something unless there's a backdoor and you're trusting a centralized exchange like FTX. And I just see it as a simple mistake. The simple mistakes can F people over of all their money, right? That is something real. That is something that does happen. That is something that will continue to happen as we play things out into the future. As these things get noticed and found, it creates a better environment for people moving forward, because all of the details matter in these cases, right? You're like, oh, something simple with changing the decimal places for Alex, and then you end up having an issue with the rounding, which then causes people to not get actually any bonus, right? All of the details matter, and far more rigorous testing and understanding of these things. Like this community just understood about bugs, right? Now we're way more hyper aware because of this, because of what's happening in Dipcatcher. But this same exact thing is playing out in 27 other communities throughout crypto.
Would create a dev robot for checking calculation parts of it. Maybe not like the other part. Whatever, whoever does it, I want it for free. And I don't want some human who has horrible lifestyle habits control of any control. I need robots.
I don't even think like an automated, because stuff like that does exist, for coding and software and stuff like that. I don't even think this would have picked it up.
But it's the math. It's just like I don't know all the other stuff. I'm saying like there's equations within it, right? Like
right, but for example, like whoever's auditing it needs to be cognizant of, let me make sure this math is adding up to what's in the white paper.
Well, right, and that's what I'm saying. Like a calculator could be helpful with that.
Right, or just like there's so many zeros.
I mean, like I don't
like I can see how the mistake. I can see how the mistake can be done because it's literally like a decimal point or a couple were off. So like to the eye, you look at it, you might think it's 6 zeros and a decimal, and it might be 4 zeros and a decimal. And your eyes are playing tricks on you.
Right. And I'm just playing devil's advocate because it's more stimulating to my brain.
Yeah, my main issue once I realized all this stuff is like, you know, the part of the audit. But I'll get to that towards the end. Like we can finish this and then I'll give my 2 cents.
Let's get back into Sloth.
Look at Sloth's face one more time. This is how he feels right now. This is a great moment in the history of DeFi. Look at his face right there. Ew. That's a meme. What's that meme with that guy? Anyway, that's classic. Let it go. I love it.
Larger stakes are now less incentivized, which means dividing your stakes up into multiple wallets to decrease the minimum stake length is now more advantageous and will probably be done more. So like if you were borderline on a shark position for a 270-day lockup period, you are more likely to split that up into 3 or 4 dolphin stakes and only get a 6-month lockup period instead, because there is no incentive to wait that extra 3 months and be a shark position anymore. Let's see what else.
On that,
what's a pool? So yeah, what's a pool?
You can pause that. You can pause that. I want to open it up if we can.
So on that note, right? So Sloth is saying that the longer stakes are disincentivized if they were thinking about the bonus for this. Yet at the same time, that's I think in the equilibrium, meaning like at the longer term. In the first year, there's still a abnormally high return. So like the stake length at this point, 270 days from today, is like you're still going to have higher yield than you would otherwise have in some circumstances. But after you move forward, yes, another thing that it disincentivizes is whales, right? If you increase the workload, for a whale, right, then they're going to be less likely to participate in the system. Is that a good thing or a bad thing? I mean, maybe it helps the smaller guys out in some way, right? Because then more small people can be involved in it, or the people who want to put in the work. But some people don't. Like I have multiple wallets for stakes with Hedron. I don't know. Like it'd be easier if it was all one. I'm just saying. But there's going to be people who don't want to do that, right? So sorry, that's all I wanted to say. If we can get back into this.
A bit of their value proposition as well. And because not only was like the inability to be diluted in the pool, that's his main value proposition, but also the bonuses that were generated in the system What's has got a copy of. That's a whole set of bonuses that no longer will exist. And that was actually a decent amount. Like, you know, the 5.
I didn't actually do any stake, or those the NFT things.
I did one
part of the value,
but I told people to do. No, I think I did a couple, but I told people to do very low. Those were better speculative plays on the low value end, in my opinion, because it was just risky. But it was kind of like I wouldn't put a lot of money. That was me though. Like some people did. Some people told me to go all in. Some people called me. I ain't going to call their names out because, man, I ain't trying to be rude this morning. But some people called me telling me to tell you, Sam, to go all in on Watsons. Literally, they called me to tell you because they thought you had more money, I'm sure. Like, I mean, they were just like, well, because they probably knew me a little better and they were just assuming from your little older, like whatever, in the way that you talk, they were like, get him to do Watsons. And I was like, no. I was just, and it wasn't even that I thought you would lose money or make money. I was just like, what do you want me to call him right now? Like, and I was like, and then I think once I called you and I was just like, I'm not doing this shit. Like, I'm not telling Sam to fucking dump his money in this shit. He's got a brain. He can do what he wants. And I tell Sam when I buy shit. So like, he's not missing anything from my end, I guess. Like, and I never tell.
But this doesn't mean that they're going to be bad. I
have. Mine's done great.
Yeah, like yours is probably going to continue.
Mine has more money. I think no, maybe not. I think it might be like, is it fair to say they could be close on a small one to like even already? But I don't know. But I think mine might be even. But anyway, let's not open that up too much. I just want to be cautious and everyone to say like, don't listen to people other than your besties and the devs and like the people that are like
use this. Listen to other people and throw out 97% of what people say, and then use this to decipher things that are true for you and act in your own self-interest, right? And give people other if you're trying to get somebody to do something, try to like understand that they're going to act in their own self-interest and get them to act in their own self-interest, which then is in your self-interest because you are able to help somebody instead of push somebody. Because then you get them to start using.
And then you could tell that if you're any bit savvy with people, like no one calls you that you don't know asking you to buy stuff. That doesn't occur. So when it does occur, think to yourself, why is this occurring? Why am I calling Sam right now? Because I want to call Sam sometimes. I don't call Sam all the time. But it's not right now. I was like, oh, what the fuck? I'm doing something. I'm doing shit. Like, you know, it was just like the weirdest feeling, but I'm so used to that, Sam. I'm sorry to say it. Like, I know a manipulative bunch. I've been that way in that group and that crowd and myself. I think the most important thing is you have to trust yourself. Like, I know that I'm not the smartest dude in the world, but when I'm trading and when I'm doing stakes and when I really do trust my sentiment before anyone else's, like I have to click the buttons, like, and I think about it for golly a long time before I do it usually. And I talk about it all the time, like what I'm doing and why. Like I talk to Sam about Zen, for example, and I just say, I think there's just some factors here that I really agree with. And he's like, yeah, I think that makes sense. But it's like, I'm not telling him to like go for it. Like, you know what I mean? I just want to have an open conversation about all this stuff. Just like when on the Twitter Spaces the other day, all I wanted to do was have an open conversation about some of these metrics. Really, my question was going to be about the gas fee structure, but nobody really wanted to hear what I had to, you know, they kind of just, I had to be quick. So should we keep playing this?
Yeah, let's play a little bit longer.
Let's play a little more, and then we're going to pull up a tweet of Alex from Hedron, and then there's some there's some dip catcher stuff that we have to cover, and then we'll talk a little more.
Proposition of WhatsApp. And so that doesn't exist anymore, which means part of the value of WhatsApp no longer exists anymore either. So that is unfortunate. Let's see what else. I think one thing that's important to note is that in the beginning, when Icosa was being launched, this specific feature set was, at least from my recollection, one of, if not the most criticized incentivizations in the system. I think there were definitely people who were not happy about it, but who were critical of it. And essentially, they were critical of giving large players more of the system's inflation. So those people may actually be happy. I've seen some tweets of people who were actually like, actually, this is great for the system long term. So, you know, we'll have to see. My personal opinion, I'm more disappointed that we have to now just deal with the fact that Icosa and Hedron have like a small blemish on its reputation, that like we're going to have to explain why this bug isn't that big of a deal, and we're going to have to be playing defense when it comes to like people who already don't like Icosa and Hedron. So I think that's probably the most negative thing that this bug is going to produce. And that's not, it's not even the game theory, the downstream effects on the game mechanics and the game theory of the bug that's the concerning thing to me. It's more the fact that people can now say, well, Icosa had a bug in it. Why should we trust anything else in the system? So I think that pretty much wraps up all of my thoughts pretty well. TLDR, not really that big of a deal, but not insignificant. It doesn't change anything that I'm going to be doing personally, but it does decrease the value of my Watsas. And for those who are thinking of making larger stakes, they're more inclined to make shorter stakes now. So maybe we get a more rapid, the velocity of inflation ramps up a little bit because less people are staking longer. That's a possibility. But yeah, so that's essentially what's going on. There was a long chat last night where Alex came on and explained it. There's some talks about like forking as a potential option. I personally don't think a fork is necessary. It seems like it's going to cause more confusion than it's worth. I think the system as it exists now, even with this bug, is sufficient. And I think this, without the yield bonuses, I think it's sufficient if it launched as it is now. Sorry, let me rephrase that. I think it would have been okay to originally launch Icosa without these volume bonuses.
I agree.
The problem now is we all had this expectation, and that expectation was taken away. So yeah.
Is this Icosa dumping? I mean, not Icosa dumping. Can somebody tell me if these Watsas are dumping? Are people taking them out because the long-term speculative pump, I guess, extra sauce, you could say, or are they? That could be an opportunity too.
Icosa's down 25%.
What's the number on it?
85 cents.
No shit. Man, you see how important this stuff is, guys. I told you that this was Sam. I mentioned all this stuff before I knew there was any problems, and there was no problems at the time. And I said Icosa is low liquidity. So now, what is there a problem with? People dumping Watsas, putting Icosa on the market, making a very low liquidity pool that people don't understand have probably more dump pressure than it should, and it could be an opportunity. You know.
If you're in for the longer play, like if you're willing to,
they got no choice in those Icosa stakes, Sam.
If you're willing to invest for a longer term, in my opinion, you shouldn't fucking do any of this stuff. I'm not going to be doing this right now because I have capital type and other stuff. But if I had more capital, I would be doing this play. I personally believe that this is actually probably beneficial. Like it's a blemishing of one's reputation, but this is a perfect opportunity. You'll see these things in your history of investing where bad news comes out and people overreact to those things, right? That happens perpetually. It's like, oh, I stubbed my toe. Oh, wow. Did you hear Sam's getting his foot cut off because his toe is infected and he has this weird disease that makes you cut off your foot, but from the knee down. So you actually have to use your calf. Like people's minds are just insane, right? And this type of thing happens, and these opportunities present themselves as massive buying opportunities, in my opinion. Go ahead, dude.
Well, Sam, the Frank matter, I don't want to dive too deep into this, but this does affect whether it positively affects the Icosa pool for the day. And remember that 5% of your principal was delivered on that one day because of that move. And if you put $1,000 in, that means you had, $50 on the day, I think, that's a lot, I guess. But the bigger players, it all makes a difference because there were expectations in those pools. I have a lot of money in that Icosa pool. I'm pissed about this shit, and I'm not pissed. Now the whole liquidity pool that I've been paying attention to for the last 3 freaking weeks is totally null. Makes no difference. I was studying that for hours, in my free time, trying to really keep an eye on that, thinking that there's an opportunity there. And there still is, of course. And there's always opportunity within the volatility. But the expectation, now I just have to eat it and either buy more or don't.
I think at some point, if there's enough of a shock where Icosa goes down low enough, then segment the market in the sense that if somebody wants to, pull money through Icosa using a longer term stake, it will make more sense to use your Hedra. This is not the case currently, and this could be the case in the future. It could make more sense to just do an advance on your stake, and then you still have the optionality to be able to acquire your stake back using the advanceable amount of Hedron on there. And if Icosa continues to trend down, the only way Icosa would really be, not necessarily valuable, but like the people who would be using it are going to be the people who have stakes that are coming out in less than 15 years. Because
and the WhatsApp pool, people are going to dump on that because I'm sure even if it's a good opportunity, people are still going to dump on that. And I mean, short term, was I thinking about making money on Icosa? No. That's kind of why I staked it, I guess. So I guess by staking it, I was kind of like determining that was part of the long-term implications of this stuff. And frankly, I don't really give it. I'm starting to not give a shit. It's not about my bags as much. It's just like, dude, it's just going to either work out or not. It's not my stuff to be checking on other grown men's work. I got to start. And I do this a lot. I don't talk about many projects, but I trust. I do trust sometimes. I choose to trust blindly until I'm deceived. And it's a strategy that some people use, and it's one that I use. I don't mind getting deceived. I just want it to be done quickly. so I can understand quicker. So it is important. And I say deceived by like a mistake, right? Like it's a mistake. And by deception is like, I trusted you to put my plumbing in my house. Sam, you said you're a plumber. You put all my plumbing in my house. And then my kids aren't having showers before school because my shit's messed up. And whose fault is that? Everyone's felt that feeling before. Everyone's felt that feeling when customer service, someone comes to your house, dog fence, this, that, anything. And like the dog runs away still, or the gutters are messed up still. And you're like, I just paid $8,000 for that, or the AC. And it's like, doesn't matter, kid. Screw off. Like that's part of the game. And it's like, it is part of the game. And I'm used to it. But in DeFi, you have these mystical theories that in your head, like there's human perfection. And at the end of the day, there is not.
Agreed. 100%. Do you want to get into Dipcatcher at all quick before we wrap things up?
Yes.
Or do you want to wrap? Okay.
Well, first, Dipcatcher messaged me this morning, and this is what he said. Basically, Poly is now backed by 0.85 Hedron, which is staked. The HSI can't be ended due to an issue with tokenizing/detokenizing, because the way I simulated the auctions, transferring the HSIs on testnet was not fully identical to the way the auction actually does it. Realized it right at the first few HSIs were won and the HSIs were detokenized from Dipcatcher. Bad news. The way I test, is that exactly what he sent to me? Or is it a little different? Oh, okay, never mind. Bad news. The way I tested transferring HSIs to the Poly contract on testnet was not how the auction does it. So the HSIs in Poly are stuck. No more bids will be made, and the remaining 1.2 trillion Hedron, that's a lot of Hedron, will be staked. A maxi airdrop to the Poly holders at expiry may help replace those HSIs. Luckily, the downside is capped at around 15% since we caught it early, as the Hedron earned by these HSIs is able to be minted and compounded into the Hedron stake. While this is not what we planned for, the contract will continue to operate as giant liquid Hedron stake pool. Sam, I want your thoughts.
This is very unfortunate, right? Because you have the trust being tested with FTX, with Crypto.com, with the Luna stuff, with everything that's taking place. And then you're like, oh, my backyard is safe. And then the thing with Alex, and then the thing with Dipcatcher is taking place. But let's think about like this moving forward. You have a boatload of Hedron that is now not in the market for these HSI stakes. I saw this, and I didn't participate at all in like the NFTs for ICOSA, or I barely own any ICOSA, and I didn't participate in Poly. And I'm not saying that like, oh, I'm special, but I just personal choices I chose not to. And I saw this, and my immediate thought was, ooh, it's time to take a closer look at these auctions. This just pulls people's attention away from them, both of these things. And now what does this do for the Hedron price? Well, because of the negativity, because of the broken trust,
I hope
people are not going to be paying attention as much. So if you want to pick up a cheap HSI, the probability has just increased that you're going to be able to do that. Also, all of that Hedron that was going to purchase HSIs from individuals that were interested in purchasing HSIs, those individuals may still be interested, but now they cannot do it through that contract. So if they purchase, if any percentage of those people purchase Hedron now to go buy these HSIs, they have to buy a lot more of the Hedron, because 2 months ago the Hedron price was higher, right? So they have to burn more Hedron. I don't know. I'm gonna check out.
I don't like it. That's all I'm gonna say. As an investor, I'm not the richest man in the world. I think everyone knows that. I'm 28 years old. I'm just a normal guy, I think. And I have a lot of money in Hedron. And I do have some money in Icosa staking. And I have money in Hex staking. And I have money in Hex. And, I think the value proposition for Hex just grew by margins. I'm just going to say it once. I'm only going to say it one more time. I think the Hex value proposition, due to the 100% uptime, flawless operation of Hex as a smart contract, on the front end and having accessibility through all of the mechanisms, has been audited. Well, you can give Richard a bunch of S all you want, but he had his stuff audited and paid attention to as well as you can, I guess. And but there's flaws. I've heard there's flaws in some of the design, but not the security.
There's DebCatcher tweeted about 3 tweets in the past 20 minutes while we've been talking, so we can go through them and have some updates. So this is
perfect.
So we'll do it in order. So if you guys want to read this one out.
DebCatcher. This is from 25 minutes ago. Hedron SA just minted 500 billion poly, which has the effect of decreasing the percent lost per user from the bids that were placed on HSIs that can't be ended. I'm not sure how it has that effect, and this immediately followed by burning of 500 billion poly. Now, one poly is back to 1.1 Hedron staked. Unbelievable act of benevolence.
My brain, I want to literally just get punched in the face by someone way bigger than me right now, because I'm just confused.
Yet another plot twist. Due to some benevolent minting and burning of 500 billion poly is now backed by 1.1 Hedron. Interesting, because I was looking at the price as we were talking about this, and I was like, why isn't poly selling at a much bigger discount? And that could have been why that was taking place. But I don't understand the semantics of how that all played out, but it is very interesting. And somebody is trying to add trust back into the, deflating balloon of trust that has taken place in the crypto market as a whole, but more specifically in this ecosystem here.
Is there a penalty for ending a Hedron stake early? I am going to say yes. Yes, there's a large.
I don't think you can end it early.
You could, but there is a penalty.
Well, Hedron is on all circulating supply, so I have a feeling you probably could. Icosa, though,
you could, and when you click to end stake, it'll tell you what the penalty is, because it's based on how many days you have left. Yeah,
by days. I remember now that Alex was explaining that or something.
Yeah, before you confirm the transaction, it'll tell you what the penalty is.
Big penalty, someone says in the chat.
So I just wanted to give like 2 cents regarding what happened with Icosa and with Hedron. So like with Icosa, I wasn't aware that it was that's not to blame Alex or anyone else. That's all me. But I wasn't aware that it was not audited. And by not audited, I mean like not audited by a third-party company. It was audited by Pulse Police, which I haven't been vocal on this show, but if anyone listens to me on Twitter Spaces, I've been vocal of that particular group, not the individuals, but people within our community auditing our own projects. That's not something that, as an investor in any particular project, makes me feel comfortable. I will feel a lot more comfortable that like a third-party company like Certec, did the audit versus us basically policing ourselves, because that's basically what happened with the Icosa contract, where we basically policed ourselves and everyone missed out on this miscalculation. It was, I don't think it was nothing nefarious, but these things can happen when it's like, oh, it's Alex, we trust them. So they're not probably looking at it with a fine comb like they normally would if it was like a third-party company. So that's my issue with Pulse Police auditing projects within our ecosystem. I know sometimes they audit stuff like they might be outside of the ecosystem just to like, try to keep the community safe. But, something, as big and as important as Icosa, it should have had a third-party audit, in my opinion. And then in the case of Poly, and someone correct me if I'm wrong, I believe that was audited by a third-party company. And if it wasn't, again, same red flag. But, even in Poly's case, maybe, it's not necessarily his fault, because I understand the way he tested it was different. But then that also, comes to question if these third-party companies, if all they're doing is reading code and not doing the testing in a similar fashion that Dipcatcher was doing it, they're going to miss out on that mistake as well.
Correct.
I still want a calculator involved.
The standard for auditing is probably, the bar for that needs to be raised. But, you know, we're in the nascency, we're in like the beginning stages of this stuff called crypto. This is going to evolve. This is going to change. It's going to get better. It's going to grow. The mistakes people are making are now, like, the new person who just heard about this is going to effectively learn so they don't make the same mistakes, and they're going to tell other people about it. We're, as a community, people are talking about this, and collectively everybody's going to actually be better from an intelligence standpoint moving forward. Yes, somebody did a mistake. Yes, people did financially lose money. That is a real thing.
This is what I'm worried about, Sam. As I get more involved, it's like half the companies don't know what they're auditing. They don't know what they're looking for. It's a scam. Like, and it's not a scam on their end. It's a scam on our end for not. These people, you got to have someone that knows what they're doing. You have to take responsibility for everything in your life, not take the easiest way, the cheapest way, or whatever the case is. There's always shit like that in every industry. Like, you can buy copper wire with this gauge, or you can buy a shittier gauge, and it'll last 11 years or 17 years or 25 years, depending on the gauge. And it's 33 cents more on a yard or whatever. It makes a difference in the companies that do great work. It's also harder to ground those kind of wires, but good companies will use bigger wires sometimes, or whatever, better gauge, or like more something to keep it going longer and to be more efficient up front, even if the cost is harsh. And I'm not saying anyone's doing anything. I'm just mentioning.
So I think, and I don't know, and I'm just, this is back to Dipcatcher's thing from earlier. I'm trying to understand how this works, because I didn't dive super close into Poly. So the 500 billion essay, right? We all have our ideas of where that came from. That was minted. Now that hedron goes into the pool. Then they took their poly and they burnt it, so that hedron stays in the pool to offset some of the wasted money. In terms of 15% of all the hedron was spent on these HSIs that can never actually be executed, right? So what happens to those things that can't be executed? The money in those HSIs that cannot be executed helps out hex stakers, right? So that money helps out the hex stakers here. Alex put in the 500 billion here into the poly thing here, and then burnt it, right? So that adds to the pool. So the 15% of money that was wasted right there is partially offset by this. And I'm just putting this together as I'm reading it again on the side here. So he also just printed out. I can
only imagine. Oh, go ahead.
I just wanted to comment on this, like, just to add on to what I was saying before, like, yeah, auditors, third party, they can mess things up too. And we've seen many examples of, like, where an audit, was done on a particular project, and the auditor didn't pick up anything, and then the original developer noticed the bug, and then but the difference between a third party project auditing is they have something to lose versus us self-policing. Because when something like this happens, we just can't go and be like, yeah, I blame it on Pulse Police. Like, Pulse Police has nothing to lose, versus saying, like, Certic messed up and now their credibility is at, So, those are one of the things where, based on, what we're talking about, like, our audit's important, and then human error, and then, and this is not good, for DeFi. So yeah, we need to get better at, with this auditing process and our testing process. And then, yeah, and if it's one of those things where it costs a lot of money and time, it might be worth it just for the sake of, people's money. Like, how much, I think we calculated it before we came on. How much was that 1 point whatever trillion hedron worth?
A little bit over 3.6 billion.
We're talking about millions of dollars here. So, waiting, not rushing, spending an extra 15, 20 grand to make sure people's money is safe, especially in our ecosystem, given, like, how flawless Hex is. And, these are products being built on top of, Hex, and now, being built on top of hedron. So it's not like we're building on top of Hex. Now we're building on top of derivatives. We need to be extra careful. So
we need to be extra careful with what we're doing with all the liquidity. Not saying people are cashing it out and spending it. That's not what I'm saying at all, really. I don't even care. I'm saying that people are moving around this liquidity in different ways, and sometimes they feel as if the numbers or the digits will actually produce the dollars, Sam. And they like think, okay, so Hex is here, right? And then we had a Hedron derivative, the first one, right? So it's kind of like it's the first one. It's a real derivative. And then we have Icosa kind of loops it back, right? And then we have Maxi just to keep it liquid. That kind of makes sense to me totally too. I participated in that. And then after that, I'm not going to lie, I was done paying attention. That was me. And everyone noticed it probably too, because I never really wanted to talk about poly. I never really wanted to talk about these things because I said, how much attention and liquidity, because, there's users in here too, they buy stuff. How much in attention and liquidity can we spread out without new users coming in? And I became aware that no new users were coming in my own head, and seeing all this regurgitation. You have to experience it. And I'm not saying no new people come in. I'm saying this is not the reason people come in. It's not, nobody's coming into crypto to buy poly. No one's coming into crypto to buy Icosa. No one's coming into crypto generally, unless they're really weird, to buy Hedron. Not saying that those things are not all good, really high risk speculative buys for good price appreciation, but they're not onboarding anyone.
Correct.
Sam, do you get that? Do you feel that way? Like I'm just like, I get it in a market that's fluid with like sardines everywhere, but it's just really not the way it is. It's just a big wealth gap, and it's just like.
But that also doesn't necessarily mean that in the future there couldn't be 10 to 150 to 1,000x the liquidity that there currently is, which means that this could be a big opportunity in the future. As this is not starting the funnel, right? The funnel is something else that's actually driving adoption of crypto, not these. I agree 100%. That seems to be very logical and makes sense. But the things that are driving it will eventually start to trickle into some of these things, driving up liquidity. And I think that's how I think this will play out. It might take 36 months or longer than that. I don't know how long it will take to play out, but I do think the liquidity in these pools will grow. And I think
I do too, but I'm just hoping that we're growing for the right reasons, and it's actually not just so other people have tokens that they're like excited about and have cool communities with. Because again, it's like I get in trouble for all this leeching that I do, but it's like I talk about BNBP. I don't bring that shit up on the show anymore because I just get harassed. Like it's not that I don't love it. I do love it. I actually still like it a lot. But Sam, do you hear me talking? Am I shilling it all the time? No, I'm not putting my mask back against the wall. I might do a show on it. Something's coming up for sure. I love Jacob. I talked to Jacob on the phone. And a lot like this guy, John, you've been all over me in the chat, bro, and I'm under the weather, bro. So just chill. I don't know what you're saying. And what he said, GRC, I have a screenshot of someone asking you, Hedron will make you a millionaire in the next bull market. And you said 1 billion. How many X's is 1 billion from now? Doubles. How many doubles? Tell me how many doubles there are. And, that's actually probably reasonable. But no one will hold. You don't understand. No one will hold. By the next bull market, no one will have their Hedron. It'll either be in smart people's wallets or on the market. No one knows what's going on. Got to dilute everyone. That's what makes those gains possible. That's why I liked Hedron, because it was new. When something's new, it doesn't have that mature liquidity already, and it can do more multiples just via economic energy. And me and Sam are both on the consensus that, if everything stayed constant after a couple of days ago, like Hedron would do more X's than Hex 150,000%. Still probably would bet on that, but I got to rethink it now.
Yeah, I don't plan on necessarily changing anything at this moment in time, but I'm still. We'll see how other people are responding to this. I don't necessarily change how I'm going to position anything at the moment. We're still too early on this, but the only thing that could potentially be a change for me is that I actually start to participate in the auctions, because now I think they could be a much better deal than they were prior to this taking place.
Well, can you talk to me about that when you start doing that, please?
Yes.
Will you call me if you start participating in that so I can? Hey, I think there was another super chat too, so I'm sorry if I missed that one. I think it was from Pacific NW _ Hex, but Piers.eth. Thank you so much. I appreciate you. Your positive vibes are always critical for me. I'm not always in a great mood. I'm not always in the best mood, but I am always going to do unbiased like research. And I know he appreciates that. And that's what I hope. Appreciate the fact that I'm trying to be honest. Like I'm not saying I'm right. I'm just saying like there's no one in the space that's trying to be honest. It's a gift when Sam tries to be honest about some of these things. It's a gift when I put my work into being honest, because I can't find anyone that's not anyone, but a lot of people. You know how it is.
Yeah, I appreciate you guys for listening. We're going to end it here with some DeFi proof. We'll be back tomorrow morning at 11 a.m. EST. Peace.
Young folks, you dripping on them motherfucker.
Richard Heart. Richard Heart.
Bought my hex from the fucking start. Point one every day we mark. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Heart. Got paid on big payday and I had a hairy start. Now I'm checking on my pulse just to check my heart. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Heart. Got paid on big payday and I had a hairy start. Now I'm checking on my pulse just to check my heart. Checking my MetaMask moving. Look at the hex, he is mooning. Looking at wives they be choosing. Peter is why they be losing. PulseChain's out, now get me a check. He's gas up and it got me a mess. Remember the times he died collect. Hex I been eating, I'm dying in the best. Getting this back like a year ago. Getting this PulseChain lingo. Swerving the ring like a Lambo. Getting this back like a year ago. Getting this PulseChain lingo. Swerving the ring like a Lambo. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Heart. Got paid on big payday and I had a hairy start. Now I'm checking on my pulse just to check my heart. Bought my hex from the fucking start. Sacrificing all this bread like I'm Richard Heart. Got paid on big payday and I had a hairy start. Now I'm checking on my pulse just to check my heart.